Hi, welcome to Community Living. My name is Malapun Kosi and I'll be taking you through investing for beginners. So these are some of the tips, points, steps that I've been using in my investment journey. So I think I was one of the lucky few people that um, sort of had an basic understanding of financial literacy by the time they started working. So from the get-go, I had already planned and I actually knew that I should start in my investment journey from as early as possible, So the first month I had already started with putting away money towards like my investment goals, if I might call it that, or my investment accounts. And I had access to investment accounts prior to that. It's just that obviously, since I didn't have a monthly income, I didn't put as much money in. So I have something written down. There are a couple of points that I wrote down regarding what you should just take into account while you're starting your investment journey, and very important things that you must note while starting in your investment journey, right? So I recorded a video. I'm just going to put it up in the card where it covers the basic concepts related to financial literacy. Things like what is the first rule of money, what is the difference between savings and investing, and what is the most important rule regarding savings, what is the most important rule regarding investing, right? So if you want to take that test and just see how financially literate what the points that are related to that test, please just go to this video. And so the first point that I am going to note is that you should understand the difference between savings and investing. So in your investment journey, you should understand the fundamental difference or the fundamental basics of investing and the fundamental basics in terms of savings, right? And the rules that financial gurus and anyone who's in the financial sphere has come up with to make these concepts a bit more easier for you and I who are not really in this financial realms, right? We're just trying to make money as first. So another thing is understanding the first rule of money, as I've already mentioned, which is to pay yourself first. So basically what that entails is that you must put away at least 10% of the money that you attain from your multiple income streams. So if you have 7 income streams, it means that you are putting 10% of all those income streams, not just one income stream, right? Unless if you have made it in such a way that there's an income stream in which it's made for, like, let's just say you're budgeting that amount for entertainment, miscellaneous and whatever, unless you have set your financial journey or financial goals in that manner, right? But otherwise, if that's not the case, you must ensure that at least 10% of it is to paying yourself. And essentially what that mean by you're paying yourself, you're either saving or investing, right? And investing can be seen in multiple ways. So if you are in a sense investing in your development, like you're attaining skills, you're attaining any form of developmental activities that will make you more seen as more productive or more knowledgeable in whatever you're doing, then it's sort of seen as investing as well, right? So that is the less tangible type of investing, but it is investing. Like that 10% that you are saving, you might the 10% that you're keeping or saving, some of it might be going to saving, some of it might be going to investments, right? You must decide how much goes to savings, how much goes to investing, right? Another thing that you must understand about the fundamental difference between savings and investing is that investments are long term. So this is money that you might never take out depending on your investment strategy. So someone might want to take out money after 5 years, after 10 years, after 15 years, right? Another person could be like, okay, based on the asset type that I am using, or that I am that I attained earlier on, I might not take out the money, but maybe only use things like dividends, right? It also depends on the asset type that you attained, right? And what is the purpose of that asset type. So another thing is to understand the asset that you will be investing in. So you must understand what the asset entails, right? How you attain that asset, where do you attain that asset, and how does it generate money on your behalf, right? Because at the end of the day, if you don't know how an asset generates money, it's easy for con artists, it's easy for people that are making a living out of just scamming others to just come to you and sell you a product that does not make sense. And any investment package has to make sense. You have to understand if, like, for example, you're buying an equity, and equity is something that is within a stock market, right? It's an asset that is sold within the stock market, and there are various factors that affect the stock market. So you must understand how the stock market works in order to understand that how will this asset make money on your behalf. Since we are using equity as an example of an asset that you might attain, you need to understand that an equity could be beneficial in, like, let's just say 3 ways. You might have an income in form of dividends, right? You might have the growth of this equity in a form of, like, the share price increases, right? And also perks that are offered to people that own the equity. Like, let's say, for example, if you own an equity of an airline, they might have discounts for people that own or shareholders. You are, in a sense, a shareholder of that equity, right? So things like that, you must understand all those things, the inner workings of the asset that you choose to buy. Is to understand the various assets that are out there, right? So as I've already mentioned, you must understand how the asset that you're buying generates money, but you shouldn't just look into one type of asset. You must understand the other assets that are out there, so that you can do some form of elimination method, where you could say, no, I don't think baskets are for the type of assets I want. I don't think property are the type of assets that I want. And maybe if you're within the property sector, like, are you flipping houses? Are you renting houses? Are you just buying property for maybe Airbnb? You must understand all those inner workings, because at the end of the day, this is how you'll be generating money. This is how you're making an income. And as much as investment sometimes can be seen as a passive form of an income, you still need to run it as if, like, it's a business, right? And with any business, you need to understand what it entails. So also an understanding of where you get these type of assets, right? As I've already mentioned, there are a lot of con artists, there are a lot of people that are scamming, are scammers, that's just their way of making their bread. And really, whether or not we hate them, that doesn't matter. They are there. And if you don't understand that there are places, or where actually you're supposed to be getting these type of assets, it's easy for the people that are out there to just con you of your heart and money, right? So being able to identify a reputable and accredited financial service provider or reseller of the type of asset that you want to go into, right? Let's just say for Bitcoin, there are a lot of people that have said, okay, I'm selling Bitcoin, I'm mining Bitcoin, but who are they really getting this Bitcoin from? Why am I depositing into my Nkosi's bank account? Why am I not depositing into my account? Why can't I have access to Bitcoin from, like, a reseller? And why do I have access to a secondary person who now will interface with the other reseller? So you need to understand that type of relationship that is in place in terms of investments, right? Or investment resellers. Also, you must have an investment strategy in place. So there are readily available solutions in terms of investing. So you would find that they've already made like some type of package to say that, okay, if you have this type of risk profile, or if you have this type of amount, or this type of deposits that you want to make, you can have access to this and this and this and that, right? And another one could be that maybe you are like me, where you have to have autonomy over your investment portfolio. So you have to be able to understand that investment strategy, as well as who will allow you in the market to get access to such a service, right? So another point is to never take credit in an attempt to invest, or in an attempt to make money for investment purposes. So it sounds silly, but there are people that consider taking credit in order to make short-term gains, and then after some time they will pay off their debts, and then take the profit from their investment or trade, right? Depending on how long they want to do it for. So if it's very short, it'll be trading. If it's very long, it would be a sort of like investing, right? And then so I think I've covered everything when it comes to that. So if you have any questions regarding investing, where you can like start, who you should be looking into in terms of the financial service providers or resellers, please just comment down below, and let's engage a bit more in terms of investing and what has been working in your journey, and what type of investment strategies are you employing in your investment journey. So yeah, thank you for joining today's episode. Please comment down below, please subscribe, and like this episode if you like the content that was released. So thank you very much for joining.